Hello traders and welcome to another video analysis. Today is Friday, the 9th of the October 2020, and we are going to take a look at the Forex calendar, and then we are going to analyze some interesting pairs and see what are the current developments on the Forex market. So let's just begin with the Forex calendar. As you can see, I'm using the InstaForex page website economic calendar. Let's mark only important events for Friday. So those are the important events, and for today, the Friday, the 9th of the October 2020, we are really really low in a high importance events because they are only data from Canada. This is unemployment rate and employment change. Both of this data are scheduled for release at 2:30 p.m. and those data are for the period of the September. As you can see here, the previous reading was at the level of 10% too, so that's the unemployment rate, and this time the market participants expect this unemployment rate to drop to the level of 9.8%, and it's kind of similar with the employment change for the month of the September. The last time we got the reading of 245,000 roughly 1,000 people changing their employment, and the forecast for the month of the for this month is 150, exactly 150 is the forecast. So this employment change, as you can see here, it will be lower. So it's kind of interesting because if the employment is expected to be lower than the last month, so the unemployment rate roughly cannot be expected really to be lower than the last month, because there will be still more people to be unemployed, unless they will resign from the unemployment benefits and they will just sign off from the council of the employment, and they will no longer receive any kind of a benefit. So that's possible, but this is kind of a interesting expectations for the market participants. So I will gladly take a look what is going on this market. I mean the US. Canadian dollar market, of course. And the main pair that we are going to analyze today is, of course, the US dollar to the Canadian dollar. So let's just take a look at the US dollar to Canadian dollar. As you can see, I have my euro dollar already on the screen. But let's just take a look at the US dollar to the Canadian dollar. The broader look is, as you can see, the multi-month trend from the March of the 2020. This is like a middle of the March. The trend is right now down. As you can see, this is the low. We've made it on the roughly this is the 1st of the September 2020. So we just mark it as a support, right? So this is our support. It's 1.3, basically 1.3 thousand. Let's say this is our rate for the US dollar to the Canadian dollar. This is very important support, and the last bounce higher has made it to the level of, let's just take a look where it made. I guess it will be like a 38 or 50% of the last wave down, almost 61. Wow, that's interesting. Apparently, that's interesting because yeah, this is the zone between the 50 and 61%. So this is clearly a kind of a retracement that you expect after this very big wave down. So let's just dive in towards this recent development. Let's just zoom in towards the latest prices. Do we have it? Yeah, now it's correct. So this is basically our consolidation zone, and after this 4-5 days consolidation zone, as you can see here, we have this bearish engulfing pattern, something like this, and we clearly have a rejection of the level. Let's just mark it. We have a rejection of the level. The highs were around the 1.3417, so that was the level of the rejection. We mark it in this way, and since then we are going down. And today, as you can see, yesterday was a big down day for the American dollar. The Canadian has been, of course, appreciated across the board. And then, as you can see, today, before the data release, we still have this little bit of the red candle, of course, and we are trading already below the lows of the yesterday. So one more thing I would like to point out on this chart. We will just use the simple trend line. As you can see here, we got this very simple trend line here. As you can see, first we touched the trend line, then we got a 1 day of a bounce, and then again the bounce was absolutely reversed, and then we closed below the trend line, and yesterday, of course, we continued the move down. So current situation, using this very simple lines and Fibonacci retracement is bearish. Basically, the trend, the local trend, since the high made on the 29, 28 and 13th of the September, the current trend is simply down, and we can expect this downtrend to continue with the, of course, some kind of a local bounces on the way. So what is the next target? Well, the next target is clearly here toward somewhere on the level of a 1.3144. Let's just make it green because it's a support. So there you go. This is our support for today, but that's not the last one. There is one more support before the main support at 1.3 is tested. Eventually, this is the main support. Longer term main support, but before this level will be hit, there is 1.3043, so 44 pips ahead of the main support. There is another let's say less important but still present technical support. So we got this nice reversal pattern, candlestick pattern, and then again we got this sandwich here. This is red, green, red candle, so we got the sandwich pattern as well. So everything is telling us, from the technical point of view, everything is telling us that this market is rather positioning itself to continue the downtrend. The main trend was down. As you can see here, we got the low made on the 1st of the September, slight bounce towards 61% of the Fibonacci retracement, and then we got the continuation of the down move. Possibly during the next few weeks, USDCAD will likely hit the level of 1.3 again, because the downtrend has a tendency to continue. It's very easy to continue the trend, and it's rather hard to reverse the dominant trend. So we expect this trend to continue towards the lower levels. Of course, as I said before, there will be some kind of bounces and corrections along the way down. And let's just take a look on the other side to see where is the momentum. As you can see, the momentum is below the level of 50. This is the level of the 50 where my cross is, and as you can see, we have broken this level of the neutral level of 50, and now the current reading is around 43. So 43 points is definitely kind of a negative momentum. That means it's a weak negative momentum, and it's pointing down, it's pointing to the south. So we can expect that generally the market is more focused on selling this American dollar and buying, of course, Canadian dollar. If today's data will be better than expected, the further spike down will even accelerate, because the market participants might keep selling American dollar and buying Canadian dollar instead. So this is basically my point of view, my analysis for the Canadian dollar ahead of the important data from the employment to be that have to be released at 2:30. So basically, in a nutshell, downtrend is being continued with occasional corrections, and we should expect in the midterm the lower levels at 1.3142, 1.3043, and the ultimate technical support for now, the support from the 1st of the September at 1.3000. So that's everything for me for now. Thank you very much for watching. Have a nice weekend, guys, and see you next time. Bye bye.